Part 5 of every stock in the S&P 500. We're going to be doing Amazon today, ticker AMZN. Here's the disclosure. We're going to go to sec.gov, edit your filing. We're going to use the 10K, or 10Q it looks like. We're going to find the balance sheet. We're going to go get the total assets, which are listed right over here at about $500 billion, 527 billion. Amazon is a big company. So far, all the companies we've done are big. Goodwill, relatively small but not insignificant, of about $23 billion. Remember, that is a contra asset. We'll have to be taking that out. Next, we'll go down to the liabilities, which it doesn't tell us what they all are. Here's the total current liabilities. That's only the current ones. Let's look it up. AMZN total, Amazon total liabilities of about 325 billion USD. All right, we'll take this number. That's a lot of debt. That is a lot of debt. Okay, so we're having about $180 billion on net. So this company really has to be driven by income. Yeah, I mean, they've also had just a couple bad quarters with, what's that guy, Andrew Jassy? I believe he was the creator for AWS. And, you know, the company is mostly retail. They do have the streaming side, and they do have Amazon Web Services, which is very large. It looks like they have negative cash flow. So this is going to be difficult to value because we're getting losses for 6 months here. What are we going to do? Okay, let's think. Amortization. Maybe we can go by revenue. Oh, here it is, net income. Okay. 9 months and 3 months, so we'll add these together. Hold on, let's try that one more time. Just to make sure that we get it. All right. So a couple quarters they had a loss, but this we're not going to make too big a deal of. We did find some numbers that we are able to put in there and do a good job with. We're getting proper cash flows, because you want to value the business over its lifetime, not just not just on a single quarter. And if we do this, we should get, you know, an average of what the company should really produce. Okay, so about 54 billion, 54 and a half a year. And then when we come into the PE ratio, again, I said it's, you know, tricky to value a company like this. Like, there are companies like, you know, Salesforce or Workday, and those ones have exorbitantly high PE ratios, like around 200, but you can't grow like that forever. So what we're probably going to do is just value them based as a retail distributor, which is about a 30 PE. Industry, retail. Online retail, e-commerce, that's what they are. Here's the number of shares outstanding. This is the market cap I think they should be at. I think they should be at 1.8 trillion. And I think that they should have about $172.65 in share value. But of course, we have to go check out TipRanks. See what the industry professionals say. All right, and our valuation's coming in quite a bit lower than theirs. We're not doing that good a job here valuing their growth rates. You know, they seem to be quite optimistic. I probably would not buy it based on these valuations, but they're saying it can range somewhere between 240 to 275. It looks like that's what they're saying, and let's just see what it is right now. Okay, so it's already at 226 with a market cap of 2.38 trillion with a PE ratio of 48. I would say this is looking on the higher side. I probably wouldn't buy it here. I think for a more fair valuation, you know, I would consider it worth maybe 173. But as always, please like the video and do your own research.